In January 1933, a settlement was reached with the foreign creditors and the reconstruction of the Credit Anstalt could finally be started. The main points of the reconstruction were that the bank's old capital was reduced from as 177.5 million to 1 million only. And the Austrian state became the main shareholder with 51% in exchange for taking on the responsibility for most of the liabilities. The foreign creditors received 49% of the preferred ordinary stock and shares and bonds of a newly created holding company in Monaco, Société Continentale de Gestion, which took over half of the foreign assets of Credit Anstalt. And a government promised to pay annuities in exchange for the as 210 million in life claims. The losses of a Credit Anstalt were more than 1 billion in the end, more than 7 times the originally announced amount. The Austrian state and the National Bank took over around 70% of the losses. The largest part of the losses was bad debts. In spring 1934, the reorganization of the Austrian banking system was completed, with the fusion of the Credit Anstalt with the last 2 remaining large banks, Wiener Bank, Wiren and Niederösterreichische Kompet Gesellschaft. The devaluation of the Austrian shilling by 28% was officially announced. The causes that were directly responsible for the failure of the bank were the effects of the business depression and serious management errors, and they resulted in the crisis because the bank and the Austrian banking system were fundamentally unstable at that time. The main origins of the instability were the effects of the breakup of the Austro-Hungarian Empire, the following hyperinflation and its consequences, the franc speculation of 1924, and the maturity mismatch between the bank's assets and liabilities. The attack on Austrian currency was a rather rational response to the perceived inconsistencies in economic policy. The domestic credit growth to alleviate the liquidity problems of the Credit Anstalt was regarded as inconsistent with the adherence to the gold standard, and therefore the public rushed for the Austrian National Bank foreign exchange reserves. It recognized the potential of capital gains in hoarding foreign currency instead of holding Austrian shilling, which were expected to be devalued. The refusal of Austrian authority to stop these inconsistencies led to a chronic shortage of foreign exchange and reduced allocations of foreign exchange to the emergence of black markets in foreign currency and finally to exchange controls.